they were the bibs that your camera bibs?
There's another stream, but cameras. Do we have an issue? What's the
Sound?
1, 2?
So I bring them. You want later?
All right.
Kuna lag? You're sitting there, Collins.
So questions unataka kuli by the way, my new name is coming in a month. The replacement is coming in a month. You know what I'm talking about. Eh? Yeah. There is enough space. Eh? Mara mnasema button, mara unbutton.
I usually sit.
So uletewe cushion. that Equity Group and Equity Bank Kenya is sharing information to our business community. Today we have a great pleasure to have Angela Okinda from Equity Insurance, and she'll be walking us through the insurance journey. I always laugh about my insurance life. So when I was in high school, going to Form 1, how did I take insurance of my money? When I was boarding the matatu to go to school, I would always put my money in my socks and into my shoes. That was my safest bet, how to take care of my money. I could call that insurance in a way. I don't know whether Angela will agree with me that that is insurance. So I'll ask Angela to just introduce herself in the best way that she can, and then we'll take off from there. Welcome, Angela.
Thank you, Collins, and good morning. As introduced by Collins, my name is Angela Okinda, and I lead the insurance group at Equity. The insurance group at Equity has 3 operating entities in Kenya. We have a life assurance business that protects your life. We have a health insurance business that protects your health, and a general insurance business that protects your wealth. And it's an honor to be with you today, Collins.
Thanks. Angela has been quite moderated on the information that she can give us, and I'll help you unpack so much from her today. She has a wealth of experience in matters insurance, and Equity Insurance has seen quite some big growth. I'll look at some numbers. So the total premiums received in 2023 was about 285.6 billion. And the market growth was about 8.2%. And the life insurance was about 42% of the total premiums, with general insurance being 58%. So looking at the Kenya insurance penetration, which is below 2.8 of GDP, Angela, what do you see as the primary drivers that could accelerate market growth to reach the continental benchmarks?
Yeah. No, thanks, Collins, for that question. And actually, when you look at the insurance industry in East Africa and also in Kenya, you'll see that the growth of the industry has been slower than the GDP. And the way we calculate penetration is we look at the premiums as a percentage of the GDP. So you would imagine, particularly East Africa being an entrepreneurial economy, having a large focus on agriculture, having a youth dividend, having mature financial services, as well as industries, would be a larger consumer of insurance. And so we see that there's a large protection gap that currently exists because we do have consumers in the marketplace conducting business, homes and communities, but not receiving adequate protection. If I can just segue a little bit into Equity's journey on insurance and why Equity Group made a decision to go a step further beyond banking. The beginning of the Equity story is that the underserved did not have access to formal banking systems. And so, you know the story like I do, Collins, 40 years of work currently, 6 out of every 10 of banked Kenyans bank with Equity. And so we could say that that journey has largely been done. But what we did realize as Equity is that 40% of the loans that our customers took could not be repaid because of a death incident or a health incident. And so the loan would go into default. And so Equity then realized that it's not enough to use credit as a means of creating wealth if it means that one incident then forces that family or that business to sell property or to collapse a business to meet the cost of an unforeseen incident. And so then in 2022, we then started off our journey in insurance, and we complement the work that Equity Group wants to do around transforming lives, where we use the banking licenses in credit really to create wealth, but we then complement that with the insurance licenses to then protect that wealth. And that wealth is not just the physical assets that we own or the businesses that we manage, it also includes our lives, all right? Because then if you're not alive, you don't have the capability to produce wealth. So we're doing this to complement that transformative journey that Equity Group is looking to achieve as part of its mission and its purpose for Africa.
Great. Quite some information there. You've mentioned insurance licenses. It would be good to just help unpack what are those insurance licenses and what solutions are being positioned to our customers.
Okay. I'll highlight, though you know, Collins, I can talk about that all day. So one of the things we did first was we started with life assurance. And life assurance is where we provide solutions to individuals, businesses, and also employers to basically either protect life in the unfortunate event of, death or disability of employees or a breadwinner. We also then provide savings and protection solutions, short-term savings solutions such as, goal-based solutions, but we also have long-term savings solutions such as pensions. And we also have investment solutions. So here we're looking at protecting the life, either the breadwinner, the business owner, or if you're an employer with an enterprise. One of the things very well, Collins, is that as a community, when a death occurs, the first thing we do is we set up a WhatsApp group, right? Yes. And so it means that in our own ways, we are an insurance company to the community. And so what we want to do is take away that burden from the community and just for a fraction of the price, pay a policy so that we no longer get into WhatsApp groups because we are fundraising. We get into WhatsApp groups because we want to provide psychological and emotional support. So life insurance is all about protecting risks related to death or disability of a life or lives, whether formerly employed or employed. If I move next to health. So health for us is one of the key areas that we focus on because we know that health is one of the drivers of productivity. And today, if somebody is unwell, then it means if they're a business owner, there's an interruption, right, in terms of continuation of business. If they're an MSME, it also means they might have to shut down their business for a few days because they're unwell. But also if they are an employer who has employees, then there's a reduction in productivity because somebody is unwell. And of course, in the larger community, we also have parents who are no longer in their active working life, but we know if they fall unwell again, we get concerned, and children. So what we're doing is to provide health insurance. And again, this is either to families, individuals, social enterprises, groups, formal and informal groups, corporates, to ensure that when you have a health incident, that you can actually get care. But very importantly for us, we have a partnership with Equity Afya, which is actually franchised by our Equity Group Foundation. And what we do is through the Equity Afya franchise network can provide health solutions across all the counties in Kenya in an affordable manner so that then health insurance does not become as expensive. But also we ensure that we focus on wellness and not illness. So how do we ensure that you know upfront, if you're struggling with a chronic illness? We do a lot of health screening. We do a lot of chronic disease management because we want you to be well as opposed to waiting for you to be sick to then pay a hospital bill. And then the last one is general insurance, where we're protecting your wealth. Now, very interestingly, and I think this is more an African posture, because if you look at Southern Africa or you look at the Americas, you'll find life insurance is actually bigger than general insurance. But in East Africa, just until just the last quarter, general insurance was much larger than life and health. And it basically demonstrated to us that we seemed to have more tangible value over things we own than our lives and health, which really is something that we need to keep talking about. But when you look at general insurance, we're looking at protecting all your assets, whether movable or removable. Your assets could be as little as your phones, your tablet. It could be your movable assets such as, jewelry. It could be, for instance, if you're looking at young entrepreneurs such as Gen Zs, it's your cameras that you use, to run your podcast, etc. But it could also be your large buildings, factories, industries. So both movable and immovable assets, we protect them, whether they are locally based or whether, for instance, you're a business person who is exporting goods. We do provide things like marine insurance cover, so whether they are stationary or in transit. And then, of course, the last one is liability, that if you're conducting business through unforeseen circumstances, the public or a third party could be injured, right, as a result of, malfunction, then we do also provide liability covers. So holistically, what we do is cover our consumers from end to end. We protect life, we protect their health, and we protect their wealth.
Thank you. And I like that place. So one, we are taking care of lives because we have to, I don't know that we live to eat or eat to live, depending on where someone comes from. Where I come from, we eat We live to eat, I think. We eat to live.
I think both are balanced from your community, Colin.
Yes. So there's a bit of life, then there's a bit of health. And what I liked about what you said for health is focus on wellness, not illness. And then there's the general insurance. And when I look at general insurance, and I'll use a Kenyan perspective, most people are focused on the legal insurance. What I call it legal insurance is your vehicle can't be on the road without an insurance. So somebody just thinks, if I get a third-party insurance, I'll have ticked the legal box. The equity insurance then is looking at building up on the life insurance side. What initiatives are you putting across just to be able to support my business customers to address the life side of insurance?
And I like that you've mentioned that, because usually business owners focus a lot on protecting their assets and not protecting their lives. And one of the things about business owners is not often do we see that business owners see themselves as actually the key resource to that enterprise. And as a result, if that business owner was not there today or was unwell today, then that enterprise would come at risk from a resourcing capacity building perspective, right? So for business owners, we've seen some business owners want to take a cover called key man risk. And then key man risk is where we basically say that in the unfortunate event that key man suffers either death or disability, there would be a cash payoff. But we're saying that a cash payoff is not enough, Collins, if you're looking at sustainability of an enterprise. And so what we're doing for business owners, over and above providing them with key man or life insurance that can then support, remember we have supporting the business, but we also have supporting the family, right, who are dependent on that business owner. How then do we layer that in with financial advice around forward planning for your business, about corporatizing and governance for your business? Because then you would want a situation where if you're not here today, there's continuity. So what does that mean from a governance perspective for a business owner to understand about their tomorrow? I can tell you this, Collins, insurance is one of those solutions where people feel it is a luxury. But I can tell you for free that 80% of the things that happen to us in life are unforeseen. And as such, insurance is more around protecting yourself, your family, and your business for that 80% unforeseen, to ensure then that your goals, your ambitions, your lifestyle are not derailed because you then have to divert funding or raise funding to meet a critical need or incident because you didn't have insurance. And so we say that planning for your life and business and its growth, a big part of it is also planning for protection in the unforeseen event that certain issues will occur, right? So for business owners, we complement that. We have the solutions that will protect the business itself in the event the owner is not there, but also the advice in terms of how do you plan and manage your business for the future, for sustainability. And then the second bit is the family of that business owner. What then happens if the business owner is not there? You'll note, particularly in the African context, that nobody wants to discuss death. Nobody wants to discuss if I'm not there today. In fact, some communities, like where I come from, is almost taboo. But we do know that as sure as we are alive, a time will come that we will surely meet the Maker. And so getting our customers more comfortable around forward planning, protecting their assets. A lot of assets actually, in the unfortunate event of death, actually get lost in the administration process, get taken over, get consumed by administrators who don't have the best interests of the business owner at mind. So this is about protecting a legacy and ensuring that the goals and the dreams of that entrepreneur, business owner, can continue to persist even beyond their days. So we provide the financial products, the insurance products, but we also support with financial planning and advice to ensure then we provide capacity to that business owner and protection.
Thanks. And I actually want to put a pin around that financial planning, especially just protecting against with wealth erosion. There are we've seen a number of businesses that when the key man, as you put it, transitions, then challenges start coming in. So what kind of insurance solutions will you position that just to be able to address on that? Yeah.
So, from a keyman perspective, the cover that responds the best is keyman insurance. And you can imagine, I'll give you an example of how keyman works. You have a business that has 2 or 3 business partners. You could potentially have taken a loan as a business, both of you as a partner, and that loan is supported by proceeds from efforts of 2 partners. Now, unfortunately, one partner passes on. You now have one individual, one business partner left, but carrying the burden and the loan that was supported by 2. So we do have keyman insurance that will come and settle the outstanding loan on behalf of that second partner, so that then the partner who continues to be alive is not caught up with, can I say, a double burden, yet the contributors towards settlement are one. So keyman helps, number one, to settle, for instance, outstanding loan obligations, but it also helps to support things like pending tax obligations, other liabilities that you might have, to ensure that that business is protected. Now, usually it's recommended that a valuation is undertaken because how we value businesses before we take keyman is a little bit different. But the smaller businesses, you would simply try and look at what are the liabilities and then get you an outstanding insurance policy that corresponds, so that in the unfortunate event something was to go wrong, then the remaining partner or the families, in case both partners are not there, can actually get relief. But the second bit is, I keep going back to business continuity. Businesses rarely have sufficient time to sit and plan for my 6 months or 1 year outside cash flows, right? And we are saying that as you build your enterprise, that enterprise will grow. And as you build that enterprise, we'll need to put in or support you to put in measures to say, okay, once my enterprise goes from single man to double partnership or limited partnership, and then we then go from MSME to SME, then what does that mean for me in terms of a continuity basis? And of course, even having a conversation to say, what would you want to happen with this business if you're not there? Would you want to sell it off? Would you want to transition it? What would that valuation be? Because a big part of what we believe in as equity is sustainability. So business for now, but also business for the future. So a lot of what we do is we couple financial products, insurance products together with capacity building and a knowledge base, so that then between the two or the twin tools, then we're able to support our customers effectively.
I love that. I love the part of tallying in the business, the insurance tools and the financial tools. So with SMEs contributing about 30% to the GDP, how then is equity insurance? How can my business customers who are watching us today just take advantage of those solutions using the branch network?
Mm-hmm.
Yeah.
So thanks for that, Collins. And I'll take a step back to say that when you look at the current market, most insurance companies don't have, can I say, tailored solutions for SMEs. What generally exists in the market is corporate solutions and, can I say, bite-sized options for SMEs. SMEs face different challenges from large corporates. And as such, you would find that the exclusions that exist in majority of policies would be prohibitive. And I'll give you an example. If you look at, for instance, pension solutions such as NSSF Tier 2, and you look at the legal onboarding process, that requires an MSME to have 8 to 9 different legal documents, you would find that MSMEs typically would not have that level of heavy corporate network that has been designed for a corporate business that has, a lot of administrative infrastructure. And so we've been engaging the regulator to say, can we lighten some of this onboarding or KYC, because SMEs are running a business. They're not doing administration. You'll have MSMEs not sitting with large payroll systems. You'll have them running off agility, WhatsApp and etc. So what we've managed to do as equity insurance is invest time in understanding MSMEs. MSMEs are different. From a risk profile perspective, they are deemed to be higher risk than corporates, but we've learned that they truly aren't. And so what we've been able to do is design more bespoke solutions that we feel are more relevant to an SME from a risk management perspective, but also in terms of benefit size and claims. So whether you're looking at, as I said, business solutions for, let's say it's your assets, you'll find that if you're dealing with, for instance, MSMEs that are like traders, we do have umbrella schemes that look at holistic goods that traders have en masse as opposed to individual pricing. So we've been able to pool some of those products and provide an umbrella cover, and then being able to onboard 10,000 MSMEs into an umbrella cover, easier to administer, much more cost effective, and also much more flexible benefits, right? Lower thresholds to trigger a claim, to ensure then that the claims process is shorter. Because again, if you delay settlement of claims for an SME, it's different because then their cash cycle could typically be shorter than that of a corporate. The second thing we've realized is MSMEs didn't have light, let's call them employee benefit solutions. You'll, for instance, have employees who only are covered for what we call WIBA plus. WIBA. This is the Work Injury Benefits Act that takes care of employees if they're injured at work. But what happens when that employee is going home? They still, if something goes wrong, will come back to the employer. So we've been able to design something called WIBA Plus or combined solution that just for a fraction of the premium covers the employee 365 24/7, right? Taking away that burden from an employer to say that something happened to me as I was going home or over the weekend, and as such, I need a cash payoff. We've also been able to build in short-term solutions such as hospital cash. An employee is hospitalized for 3 days, then there is some recompense because then that means there's lower productivity. We've also gone into things like light last expense benefits, between 50,000 shillings and 200. This one is different because depending on the area of the country you come in, the funeral could be a very expensive affair or it could be an affordable affair. So we've developed solutions which fit within processes and procedures for SMEs, but also faster turnaround times for claims, and to some extent for some of the products we have bulk pricing, which then becomes more affordable for SMEs. And I will say this, that if you look at the entrepreneurial economy that we have, SMEs are actually the drivers of the economy. So it's been a key focus for us. But also going a step further to tell the employees of the MSME, no, the employer cannot take care of everything. So how do we give you extensions on the main cover? If it's health cover, perhaps your employer can pay for yourself and 4 other dependents. But in case your family is wider, you can add parents, you can add parents-in-law, you can add siblings, again at a fraction of the cost, because we know that in this society, it's not just nuclear family. Employees are also supporting their wider family. So we've enabled them within the framework to then consume extensions that give them holistic cover. So Collins, I hope I've given you a sense of where we are on MSMEs and why we believe differentiated solutions are very important for this segment of the market.
Thanks, Angela. Angela has oozed wisdom on matters insurance. So if you have a question that you need to ask, please come to us on chat. Any question, any item of clarification, an item that you'd like to cover, please come to us on chat so that Angela can help us address those questions. Angela has given us a gist of what we are covering, and I'll be coming to her shortly to talk about what is this pension tier 2 that she mentioned. I know it sounds like a foreign language to a number of us. But as a highlight level, the few items that Angela has given us as a benefits to you as a business customer is a short tenure for claim period. Now you can budget for a specific time. There are lower triggers, so the fine print has been made easier for you to understand and make it easier. The employee benefit, WIBA plus, 365, 24/7. What better else can you get? And hospital cash. I think I'll also ask Angela to tell us what is hospital cash. So as we start off, Angela, you have just 2 clarities to give my audience as they share with me any more questions that they have. What is hospital cash and what is pension tier 2?
Okay, thanks, Collins. Let me start with tier 2 because I know there's a lot of conversation in the market. In the last 2 weeks, there's been feedback, Court of Appeal, NSSF, and so I know customers have questions around this. So, very many years, I believe this was in 1998, there was a study that was done, and the study indicated that majority of the people who were retiring with old age poverty. And when I say old age poverty, I mean not able to afford the basics. That is food, shelter, and clothing. And prior to that, if you look at the National Social Security Fund, which is the NSSF, between 1980 and 1998, the contributions were 200 shillings employer, 200 shillings employee. And that, of course, would be mandatory for anyone who has at least 5 employees. And you would find it is only corporates who would be looking at the long-term well-being of employees, and they were setting up pension schemes that were actually contributing decent amounts, 5% of pay, 10% of pay. So that 200, which was what was covering the nation, was deemed to be very low. And today, the best way to test it is, even today, if you were to receive 200 shillings a month, what would you do with it? If you perhaps look at the price of tomatoes and an egg, I'm not even sure that can be a full breakfast today. So if we're saying that that is the history, what was the intention of the NSSF Act change? It was to move majority of the workers towards a higher level of savings in retirement. Now, of course, this was happening at a time when businesses are constrained, right? Businesses are constrained because you'll have higher costs of business, higher costs of fuel, increased taxation. So you can see from an employer's perspective, these changes are coming at a time when it is expensive to do business. And so the view was that the implementation of NSSF was to take 5 years, so that every year the cost is going up slightly, as opposed to it being a year one full 6% on both sides, employer-employee. It was tiered over 5 years so that there's a balance between reducing old age poverty or improving outcomes in retirement, but also managing the costs that it was taking to be there. Now, 1998, of course, there were legal proceedings and it was suspended. Back all the way till 2013, back all the way to 3 years ago, when finally the go-ahead was given. Now, if I go back, you'll notice again, we're still having business constraints. And so when employers raise their hands and say, this one is it's a tough one for me, you can understand, right? But at the same time, you still have these employees who are working for you for 10, 15, 20 years, who will still retire regardless of the business condition. So last week, there was a court ruling that was suspending the higher rates of NSSF and allowing employers to go back to the 200. We did see NSSF come back very strongly the next day to say, sustain the higher rates. We are in the industry trying to find the best advice for employers. But what I will say is, even as we go through the legal quagmire, the question is, what was the intention? The intention was to ensure that these employees retire safely and with adequate funds. And if we are able to say that our employees are a key factor of business, they're a key factor of productivity, and we care about their outcomes, then perhaps even as the legal teams battle it out, there is a case for us to continue to save alongside them as employers, even if we know that this is coming at a higher cost of business.
Okay.
So that is NSSF Tier 2.
Tier 2.
Now, what is hospital cash? So hospital cash is an insurance cover, a light insurance cover that provides a benefit to the employer in the event an employee is hospitalized for either 3 days or 5 days, and usually this is inpatient. And this is usually coming from a perspective, Collins, where particularly if you have a business that's very reliant on human labor, for that period of time that an employee has been hospitalized, the employer will have incurred an additional cost to replace that resource in the short term until the other one recovers. So hospital cash serves to cover that gap, to say that you have somebody who 2 days, one can argue, you can be comfortable, you can make do, but either 3 days or 5 days hospitalization, then if you have very heavy human involvement in your operations, then you likely will be looking for a replacement.
Yes.
So it provides you with temporary relief as an employer, because there's recognition that there is a higher cost of business that is inadvertent because you didn't know that this employee would fall sick.
Okay.
You get what I
I
mean?
get what you mean, yeah.
The other thing you could look at, which I know a lot of employers don't know, is when you look at benefits like WIBA, as we talked about, and group life. So WIBA is required by law, and the Work Injury Benefits Act does stipulate that an employer must provide a minimum benefit. This benefit could go all the way to a maximum of 8 times annual pay if an employee gets injured while working for you. So it is much, much cheaper to actually buy an insurance cover than face a cost of 8 times annual pay. But remember, we're talking about a conscientious business owner. WIBA only covers an employee when they're in your premises 8 to 5. Now, tomorrow, if they leave and they pass on, what happens? Their family will still come back to the employer and say, can you help us? So we're saying you add an element of group life cover. And group life cover covers the employee regardless of the cause of death, whether they were at work, whether they were not at work. And we design them as very flexible covers because it doesn't even have to be a multiple of salary. You can say in the unfortunate event of death, I would want each of my employees' beneficiaries to get a payout of X, 300,000 shillings, 400,000 shillings. That will help them pay school fees, continue to pay rent as they organize themselves. And again, this comes at a fraction of the cost. Now, most times, people will deem this as an additional cost. But I would dare say, Collins, the employers are paying this cost anyway. They are actually the ones being approached by family members saying, can you top me up a bit for school fees? Can you top me up for rent? So why not just have a simplified cover for a fraction of the price that takes care of all your employees? So you don't have to worry that, I have an injured staff member, maybe it's disability because they also provide benefits during disability. Now I have to look for financial means to fund them, fund their family, and replace them as a resource within my business. We're now saying, no, I have something that protects me. And easily, I have Hospicash, I have WIBA, but also I have group life assurance that then takes care of the family.
Thank you, Angela. And as I still ask for questions from my audience, Angela has given us a very nice package around taking care of your employees 365, 24/7, and avoiding the hiccups of getting the extensions to provide additional money for school fees and small expenses that come around that time. So this is the time that you need to just sign up and see how can you take advantage of the solutions that Angela has given us. So Angela, as we get deeper into the conversation, COVID-19 gave us lessons. From where you sit, what business continuity insurance planning can we pick from the COVID-19 lessons as we move into the deeper side?
Well, that's a very good question, Collins. Before I get into business interruption, we do have a cover called business interruption. Yeah. I'll talk about health because that's where the pain was felt the most during COVID-19. Now, I know that a lot of people will remember that at some point, insurers stopped paying COVID-19 hospital bills, and there was a lot of hue and cry. Yeah. And since then, as an industry, we've gotten a lot of questions saying that, why would an insurer choose to walk away from the customers when they need them the most? And usually what happens with insurance covers is once an incident is termed as a pandemic, meaning the extent of loss cannot be quantified, then it becomes an insurable risk. Of course, as the pandemic was monitored and it became possible for an insurer to then understand this risk, a lot of them came back on cover. But even as we go into those conversations as equity insurance, we would never want a customer to feel exposed. That when I needed you the most, you went back to the policy document and reminded me of a clause, right? So the customers, our customers and us, having an understanding, this is what is in your policy document is very important. But also very important, Collins, is we allow customers to buy back some exclusions. For instance, I know we're going into elections. You will go and find some fine print around political violence and terrorism. a customer feels they're covered, but there's fine print. We allow customers to buy back some of those exclusions, but they need to understand what is in your policy first, and then engage so that we can say, because of your type of business, you may have elevated risk. Why don't you buy back this exclusion and get full protection? But one of the things we have as an offering for the customers is what we call business interruption. And the business interruption insurance policies basically cover you when an unforeseen event, which is not operational in nature, lack of planning, etc. It's an external occurrence that has then caused you to experience business interruption. Business interruption policy will respond to your loss in earnings during that period of business interruption. So if you have business interruption, let's say for 4 days, then we would have analyzed what your cost of earnings would have been, and then you get recompense for that. Now, we also recommend, depending on your type of business, you might want to have specialized cover. And I'll say this, for now, we do have a lot of MSMEs and SMEs who don't have cybersecurity cover, yet they're trading on platforms, right? These platforms are vulnerable to third-party threats. So while cyber looks like a policy that should sit with a large corporate or a financial services institution, we're saying that if you are a customer that is providing solutions through e-commerce or a platform, right, and you have financial trades and you are exposing your endpoints to customers, perhaps you should start considering cybersecurity policies. And one of the things we have as an equity insurance team is a capability to do a white hack on your business and actually show you how vulnerable you are before we provide you with a cover. So we do see that customers do have areas of exposure that they can actually cover themselves in advance, as opposed to waiting for an incident to occur and then get surprised. So for us, we've seen the advertence of technology and the fact that customers prefer to use tech platforms. There's a question there around cyber. It's, as I said, not necessarily the cover for, the high end. As long as you have a tech-enabled or a tech-driven business, then you need to be looking at cyber covers, computer crime covers as part of the things you want as part of your bouquet. And we do have an advisory team that does that. If you're running, for instance, manufacturing business, right? Why wait for us to come and assess you when a claim has occurred? We have a team of risk assessors that can visit your business and do the pre-planning with you. And Collins tell you on day one, you have exposure here, please put a mitigation in place. Because for me, insurance is the last line of defense, not the first. And the more I keep talking about us coupling advisory, risk mitigation, screening, and risk culture, then the insurance policies then have a good place to come. So I would look at it from that perspective that yes, we do have business interruption, but there are things that will interrupt your business that we don't have to wait for an incident to occur. There is a capability within equity insurance to help employers, help businesses profile those risks and put in a mitigation plan. You'd be surprised some of the mitigation plans are quite light. For instance, we recently visited a customer with a go down, and we realized that when you look at the way they've reinforced, that they're not using reinforced steel. And it's as easy as that. It is replacing a door, right? And then you protect your goods and services. So for me, it's just to invite all the customers, SME customers, to engage with us because we want a partnership. It's, yes, we will sell you or give you a policy. We have a host of them, but we would want a partnership where we also support you to understand your risks. We design a cover that works for you. We appreciate where you're coming from, what your constraints are, but ensure that your insurance program becomes very responsive, not just for your business and its assets, but also for your employees and for you and your family.
Thanks, Angela. I have the first question that has come off Facebook, and I'll still encourage my viewers to share with me as many questions as you can so that we can take advantage of Angela's expertise to give you answers here. So Mugeni on Facebook is asking, does these apply in DRC as well or Kenya only? And I'm just looking at the solutions you've packaged because he's not been specific about what he's asking.
Okay. So I'm sure a lot of the customers will have seen that at the upcoming annual general meeting for Equity Group, we are requesting our shareholders to provide us with an approval to set up dedicated businesses in DRC. DRC is one of our larger markets, significantly underinsured, and is one of the areas that we also want to set up businesses. So we believe in a short period of time we will be able to provide direct products from insurance. Are they available today? Yes. We do have a partnership. We have a local partner who we've structured products with currently in the market, and we would be happy to get your information so that we can then introduce you to our partner at the moment. But in a very short time, I'm very optimistic about the AGM. We will be setting up 2 dedicated insurance businesses in DRC, and then we'll be able to provide the exact full replica of a host of solutions to our customers in the DRC.
So I have an anonymous attendee who's asking. It's a bit of a paragraph, so allow me read. I am 53 years old today. I own a business. I have dependents and expect to retire within the next 7 to 10 years. What insurance portfolio would you recommend to protect my health, wealth, business continuity, and family legacy?
7 years.
7 to 10 years.
7 to 10 years. Yeah. All right. I'll do high level, but this is someone I would want to have a full session with.
Yes.
Because we would want to understand what is that business, what are the underlying risks.
He's a candidate for pre-planning meeting.
Yes, he's the right person I really want to sit with. But high level, I'll start with him.
Yes.
Because you say you're 7 to 10 years in retirement.
Yes.
The first thing I'd want to ask is, where are you sitting with your plan in retirement? And in retirement, we look at what is your current pension portfolio, and we have tools that we can use to gauge how much then should you save for the next 7 to 10 years. If you're targeting, globally, we recommend 70% of your earnings in retirement should match your pre-retirement income. So we're able to help you understand your next 7 to 10 years. What should you be saving at, looking at the investment conditions for you to retire safely. But we would also be looking at your healthcare in retirement, because the largest cost right now retirees are facing is the cost of healthcare. So we do have a solution where today, before you retire, you can start saving for a retirement cover, a medical cover in retirement. So I would want to do base planning for you, but at the same time, I would also want to look at your personal portfolio of debt, because as we're talking about savings, we also have to look at where will you be in retirement, because again, a lot of retirees retire with significant debt and they use retirement proceedings to settle debt. So all this would also come with a conversation on what does your debt portfolio look like? Is it personal? Do you have a commingled debt? What does your asset base look like? And again, come alongside that with estate planning. Now, this is for you as an individual.
Yes.
And as I say this as a gentleman, we could also go as far as saying, this income in retirement you're going to get, is it supporting you only, or do you have a spouse or spouses in retirement that we also need to cater for their income? So we would do layer 1, which is personal financial planning, and the host of goods and services that we can provide, but also looking at the liabilities or the debts that you have, because that could also constrain you. The second layer we could then come into is your family, because remember, your family become key dependents. So we would want to look at your children. Where are they in terms of education journey? From what we've seen, most retirees will have children in university while they're still going into retirement. So do you have a plan to support, for instance, if you still have children or grandchildren, do you have education plans that will fund particularly education costs? And then, of course, the other cost, Collins, would be cost of living and expenses and rent. So if you're already a homeowner in Nairobi or wherever it is, but if you're still renting, then there's another cost of living expenses. So these dependents that you have, again, looking at what is their runway. Will they be independent by that time, or are they going to be dependent on you? Then we can look at what is the best way of funding in the event you have a gap. Now, most people have a gap. in that funding. Then the last thing we would do is now come to your business, right? So we would look at your business, look at your current assets, look at your cash flows. We would also look at your current debt obligations. And we would look at, for instance, if it is a trading business, we would look at your inventory. And your inventory might not just sit in goods and services. You could also have financial instruments that sit as inventory. So we would start with, what is the status of your business? What are the risks? Because we're insurers, we would also look historically. Have you had claims? What are the causes of those claims? Are you underinsured? Are you overinsured? Sometimes customers are overinsured. So once we determine that, we then now design an insurance program for you. If you're overinsured, we look at how can you divert premiums for covers where you're overinsured and target them to areas where you are underinsured. If you have key risks for which you do not have insurance, we would then structure a program for you, and of course, in partnership with Equity Bank, look at insurance premium financing, right, as a tool that you can use. We also then would look at your support ecosystem, depending on your size of business, and providing information or capacity building around de-risking. For instance, I gave you an example of the difference between a reinforced door and a fortified door. So looking at the key risk owners within your business, what information do they need around understanding the risks so that we prevent that from happening? Then the last one, now we would come and look at what is your expectation of your business in future. Are you looking, for instance, I'm being ambitious, you could be looking to merge it with another business, sell it off to a bigger business owner. You could be looking to pass on this business to your child or to a separate business partner. And that now would involve legal engagement. What is your formal plan? I can tell you this, Collins, most people don't retire fully when they reach 60. All they do is start another business, start another occupation. So this is what we would want to understand. Is this the business you're going to retire from? Or is this the business that you're going to retire into? And what is your long-term plan for that? So high level, I would really want to have a conversation, but I'm hoping I've given a sense of what does holistic financial planning mean when we're talking about insurance being responsive to needs. It's not about selling the product.
Yes.
It's about understanding you as a customer, your gaps, your needs, and then using insurance solutions as mitigants for risks or also tools for wealth creation.
Thank you, Angela. I'll still ask for more questions. Where you have some, please share. Angela is here to answer all of them. And as we progress on those questions, Hezron Mutura is asking, in e-commerce, rough premiums, how do I, okay, it's not as clear, but I'll just try to rephrase it. Rough premiums and how do I insure our clients' resource? Also in digital assets, are they insured? So it looks like Hezron is talking about some e-commerce platforms and goods for customers because the message is not as clear. Hezron, if you are listening to me, you can ask the question differently so that we can give you an adequate answer. Hezron, if you are listening to me, please ask the question differently so that we can give you a better answer. You talked about under-insure and over-insure. Mm-hmm. Tell us more.
Okay, that's a good one. Let me give an example of over-insurance. So you could have a health insurance cover that has a last expense option. Last expense is a funeral cover. But you could also have a WIBA cover or group life that also has a last expense option. So you could inadvertently have bought layers of insurance where you have more than one cover responding to the same risk. And you might find that if you shave off the extra layers from one or two policies, you then we've seen customers save between 20 and 30% where they're overinsured. And then we turn back and now look and say, okay, but from a business perspective, you have certain gaps you've not insured. So why don't you redirect this premium? We actually call it optimization of your insurance program. So that is what we do. We analyze. We do find areas of duplication of covers, but at the same time, we find gaps. So we then try and see how can we reduce the duplication, redirect those premiums where you have underinsurance, and even where you have underinsurance, then how do you increase those limits? I'll give you another example. You could have a customer who is operating a business where they have cash in transit. They move money from point X to point B. After they close their business, they take their float, let's say it is 1 million shillings, and they give it to a rider or hopefully an equity agent, I'm hoping, to deposit in a bank. But when you go and look at their cash in transit cover, it's 100,000 shillings. That is a gross example of where the customer's risk is a multiple of, but even at its best, the insurance cover can only cover you partially. Okay. But you will find that perhaps that cover was taken when the daily cash turnover was 100,000. And nobody ever went back to say, this business is growing. Perhaps we need to relook at the risk profile and adjust some of these policies. So some of it could be inadvertent. And the customer doesn't know that I could have a cover, but it's a limited cover, yet my business has grown, my risk profile has changed. You could have a customer operating in more than one market. I'm in Kenya, I'm in DRC, right? Do we have sufficient cover? So those are some of the areas where we say we provide advice to a customer to say, here you're sitting well, but perhaps here you may have some exposures. And some exposures are not about insurance. Some exposures is the customer improving either a process, a risk mitigation, or a protection measure before we can talk about insurance being the solution that they need.
And that has actually helped me unpack what is called pre-planning, because you step back and unpack just how the solution is looking at. You also talked about buying back an exclusion. Just unpack that for me.
Okay. So one of the things we've really worked hard to do is simplify our insurance policies. A lot of customers don't realize, but exclusions are incidences or losses which upfront the insurer has informed you as a customer that they will not pay, right? And some of these exclusions have something called a condition precedent, meaning the insurer is saying, for me to even consider paying this claim, the following things must have been done. So we are saying that for some of the covers, a customer, depending on what type of exclusion there is, can actually buy back an exclusion or can buy down a limit. Let me give you an easier example of buying back an exclusion on a personal cover. You could have a situation where you are covering a group of employees, let's say with health cover, and we put in something called a waiting period, where we say that if certain incidences occur, chronic etc., within, let's say, 3 months or 6 months, will not pay. But we give you an out and we tell you as a customer, if you want to remove this exclusion on day one, please go for a medical test. So that we both know the contract we are getting into. So that is an example where a customer can intervene, give us more access to information, and then from day one, we remove the exclusion. Some of it, we buy back limits. You could tell someone that, and I'm sure some customers may have heard of a word called a deductible. And a deductible is basically where you could have covered a customer for, let's say, 100,000 shillings, but for the cover to kick in, they absorb the risk of, let's say, the first 20,000, which means that if a loss is to occur above 20,000, the customer would first settle their first 20, and then the insurer would pay for the limit. And that is to ensure that we have alignment in the loss. Some covers will allow you to buy back maybe that limit from 20 to 10, right? You pay slightly more, but your direct exposure, if a claim occurs, becomes less. And of course, then the insurer, we will be able to tell you, this is what we would like you to do. So for some of the covers, the buyback doesn't come in form of a cash that you have to pay. It comes in the form of, can you go for health screening, which goes back into wellness. So that we're not saying, let's wait and see if you didn't tell us that you had a chronic disease. We are saying from day one, we know that you're managing a chronic condition, and we actually work with you, as opposed to then dealing with an area of non-disclosure.
Thanks. Thanks. I'm just reaching out to Hezron Mutura. If you can send me a clear question so that you can be able to get Angela reach out to your answer. And I'm still encouraging you to share as many questions as you can. I'm happy today. I've seen something from Facebook. Now I have something from LinkedIn. Meshach is asking on LinkedIn, if I have a health insurance with you and my family member gets hospitalized, can my plan be used on them?
Yes, yes. So if you're buying or if you're taking a health cover with us, if it is for to include your family member, then what you would do is go for a family health care plan. And in that family health care plan, you will determine who in your family are you covering. Is it just you and maybe your partner, your children? You can add your parents, you can add your parents-in-law, you can add, even siblings. So we do have, actually you can see, we offer the customer a chance to build their cover, where they say, these are the people I want to cover, but we also allow them to determine their limits. Some people will say, I want more dental than optical. I want, as opposed to 1 million inpatient, I want 2 million. So we also have flexibility in the covers, but yes, we do have the family wellness plans that cover more than just the individual. They also cover the family.
Okay. Thanks. I have another anonymous attendee. This is also a paragraph of a question. Allow me to read it. Many MSMEs never recover from major disruptions such as death of founder, fire, loss, or supply chain shocks. How can insurance be integrated into business continuity planning to help SMEs not only survive major disruption, but also achieve sustainable growth afterward? I know you spoke about this at the beginning, but it'd just be good to give him a summary.
So it's a very interesting question you ask, because one of the key elements of a BCP is insurance. And what we've actually seen is that when MSMEs face these situations, when they have insurance, sufficient insurance cover, 89% of them survive. When they do not have, the ones that do not have, 65% of them collapse. So you're very right. I think the person asking the question is very right when they say, how do we support? And I'll just recap what we had highlighted earlier. For all the incidences you've mentioned, of course, other than global supply chain interruption, there isn't insurance against that. We do have different solutions that will cater for particularly business interruption, things like political violence and terrorism. If you're having theft of goods, loss, if you have fire and perils. And as I say, fire and perils, it's not just for your business, it's also for your home. We do have a host of solutions that will cater for that. But the bigger question is, are the limits sufficient? Which is where we see a lot of undercoverage. You'll purchase an insurance policy believing that it covers you sufficiently, but you may find that your size of risk exposure requires different limits. So this is where we work with you to provide support in terms of reviewing your insurance program. As I said, we do have an insurance team that does this, that will be able to look at your business and basically look at your exposures and provide you with an assessment, either for certain risks which are not for insurance, it's just changing how your business operates, right? And some then will be the host of insurance solutions. And I keep going back to the support from Equity Bank Kenya Limited to provide financing just in case that's something else that the customer needs. So we do confirm we will be able to provide you with that support. And really it's to ensure that you can focus on running your business, not worry about the 80% of the unplanned, but leave that to the your insurance partner, and then run your business.
Thanks. And Angela, you'll realize that this is an interactive conversation because some of the customers who have asked questions have actually responded. So when I asked him, when he gave Mugeni feedback, he's come back with additional comments. So it means you're doing a good job.
Okay.
So the first question that Mugeni now is having is a series of them. So what is the biggest mistake business owners make when purchasing insurance?
Wow, this is an interesting one. It's the same mistake we all make. It's not understanding what's in your policy. One of the things that has led to, can I say, a mistrust, is that the policy terms and conditions are documented in a policy document, but the customer doesn't have a full understanding of what is in that policy document. And I would say sometimes the policy documents are quite complex, right? When you look at some of our wording, including things like consequential loss, it's not the type of everyday terminologies we would use. So I would say the mistake that we all make is, do we understand what is in that policy and what it covers me for? Now, for all of our insurance policies at Equity, we do have the detailed document, but for every policy, we provide a one-page summary of key terms, key exclusions, so that then at a glance, as a customer, you don't need to read through the full 15 pages. You can just take a few minutes, look at it, and say, I understand. We also provide you with support, particularly MSMEs. You will have an advisor, a dedicated advisor who you can reach out to at any time to engage on your policy and your risk exposures. But we try and ensure that at onboarding, we really take time with you. We know, business owners are busy, but we do believe that, would want you to give just as 30 minutes for us to sit and actually show you this is actually what you're covered for. Then you'll be able to either say, I'm undercovered, I also have XYZ risks, or I'm okay. So I would say the biggest mistake is that gap, that I have invested in a policy, but I don't understand the terms. But also the other mistake that we make is we don't insure. And we leave that exposure to the community or to family to cover, when it is possible for you to have affordable, accessible insurance programs that can support your business during these times of uncertain shocks.
Thanks. And again, to give you some credentials here, Angela, our 53-year-old has come back, and they've actually acknowledged that the take-homes that they have, if I allow me to tell you their take-homes, and they'll reach out to you again.
Okay.
They are checking check retirement medical cover, check what is their liabilities, any, so that they have no debt. What is my assets best value? They require asset planning, family, where are we? Will my children be in their life journey? They've talked about what will be my cost of living while in retirement, rent, etc. And what is the long-term focus while on retirement? What will be doing? So somebody has picked action items from your conversations, which is, thank you so much for the feedback.
Yes.
Mugeni has 2 more questions, which I know speaks to a number of people. What business insurance solutions are most relevant for SMEs in Kenya?
That's a good question. I'll try and answer it broad-based.
Yes.
If you look at our economy, we have different sectors. And we have certain policies that are very specific to the sector you're in. And I'll give you an example. If you are in agriculture, right, and particularly you're a smallholder farmer, then as a must-have, as a minimum, your program would have crop insurance, right? If you have livestock, then we would have crop and livestock insurance. But if you are perhaps a trader, and by here a trader I mean a wholesaler or a retailer, then it means your core business is dealing with goods, right? Their safety and their transportation. So your key risks there would be around damage of those goods. It would be around their safety when they're on site or when they're in delivery. So you can see first, depending on your sector, we would start with what are your key risks. And so for a wholesaler, retailer, based on whether you're doing your own transportation or not, then we would cover your goods, against fire, perils, threat, if you're located in an area where there's likely to be post-election violence, we would put in PVT. We would put burglary. And again, we would give you advice in terms of how you've secured those assets. And then if you're a key man, there would be key man risk. And then if you're transporting, you've not, can I say, outsourced transporting, we would include things like cargo in transit. So the first thing to say is that the policies are very sector-driven if we are talking about protecting your business, right? But if we're talking about protecting you, those ones are very standard. Your MSME, you need key man, you need life insurance as a minimum. You need to protect your family. Those
Health
come as a
insurance.
minimum. Health comes as a minimum. And if you have employees, as long as it is more than one, you now need your employee benefits package. So we would build your program in two ways. One is you as the business owner, and you can see we've called out the minimums in terms of life insurance, health insurance, some element of savings for now and the future for you and your employees, and managing shocks such as funerals as well, because we do have a social burden. So those ones are broad-based regardless of the sector, including WIBA, because that's a legislative requirement. But if you look at the core business, now our general insurance business comes there to say, as I said, if it is agriculture, this is what you need. If, for instance, you're an advisor, you're a lawyer, you're a doctor, you would be looking at liability covers because there's no good, it's a service. And the exposure there is around malpractice, maladministration. So we would be looking at professional indemnity that is specifically focused on your career that you're looking at. If you're looking at, and I guess this will touch a little bit on what had been asked, if you're working in the digital space, and I know a lot of people are in the digital space now, we will be talking about what tools are you using first, and what equipment are you using. Electronic equipment cover, if you have employees, is computer crime. So we would now look at sector-based, and we do have, can I say, programs that have already analyzed each sector, and it's very easy, even for you as a business owner, to get access and see, oh, this is what I should be looking at, including, I would say, if someone is even an importer, marine cover that is currently there. So I would say there's those which are regardless of your type of business, because it's about protecting you and your employees. But then there is that which is about protecting your business, and we would use sector-based approach to determine the covers that you would need.
Okay. So there's a poll running for those of us who are watching us from Zoom. You'll be able to participate in the poll. I know those ones on LinkedIn, Facebook, and X, you might not be able to run the poll. So we have a poll running live. Please give us some feedback about the discussions today. So we'll give you another minute just to run the poll in the next minute, just to fill up on the poll to give us feedback and how we can improve here. Angela, Glenn Musilwa is not insured, but says this is an eye-opener conversation for him. Give him a sales pitch.
Wow. So, Glenn, I would say thank you first for logging in and engaging in the conversation, because the journey towards protection and insurance always starts with information. I would say, as I said earlier, that as we journey in life, 80% of the things that happen are the things that we did not plan for. And as you're looking at your goals and your objectives, a big part of what we do is look at how we can protect that journey and the assets that you're building. And insurance then moves from being a luxury to becoming a must-have. What I can say is that equity insurance, I believe, is your greatest partner. And we get into this partnership with you not just to provide you with financial solutions, but provide you with information tools which are technology-driven to ensure that we're empowering you towards achieving your goals, whether they are financial or economic, but also protecting those who you love the most, because we know that a large part of why we exist is as a member of community and family. So mine would be to invite you, Glenn, and any other member, whether it is at an individual level or whether you're a business owner. Let's have this conversation. You have access to a vast group of, I have experts from the insurance team. We have partners within the banking group. We have partners within our equity group foundation. And all these resources are available to you. So let's start, not tomorrow, let's start today.
Thanks. So there's another anonymous listener here. Hello, just checking. Can someone who lives in diaspora who intends to retire back home be able to have a health insurance or pension cover? What are the options up there? Cheers.
Oh, I like that. So one of the things I must say, Collins, we've been able to do, I've talked a little bit about technology. And by providing digital-based insurance solutions, it means we are able to compress distance and time, which means regardless of where you are, you're still able to provide or consume insurance solutions. So with respect to savings for pensions, you are able to save. We do actually have customer saving in USD or hard currency, not just KES. And we do have diaspora payment platforms that make it easy for you to remit this within Equity Bank. So happy to get your details and get an advisory team to sit with you around your goals. But also with respect to health cover, it's very interesting. It's two things. If the health cover is for you in retirement, then we would be able to do that. We are finalizing a partnership for international medical, meaning that whether you're retiring here or abroad, you'll still be able to have access to an equity insurance solution. But if you're planning to retire at home, which is in Kenya, then we already have not just a financial product, but we have the partnership with our Equity Afia clinics that will ensure that it's not just a financial solution, but we do have a doctor within 5 kilometers of you. And accessing healthcare then becomes very easy. And this is quality, affordable healthcare. So happy to have an engagement with you and to say that for us, we've already compressed distance using technology, and we would be happy to share with you what our value proposition looks like. The last one I must mention, Collins, I didn't say this. When customers save with you for retirement, remember they are hoping two things, that when they retire in the 15, 20 years, their money will be there. But also, customers expect that they will get decent returns. Now, one of the things we've been able to do as an insurance business is sit at the top of the industry with respect to investment returns. When I look at just 2025 alone, we declared interest to our customers for their savings products at 14% net of all expenses. And you can imagine if we continue to work hard and our plan is to invest, we would find that you're actually able to almost double our customer savings every 6 years. So it's not just us having the product, but it's also the credible investment returns that we give you that will then give you compounded value for every shilling that you give us as you go on your savings journey.
Double every 6 years. That's a very good number. Hezron Mutura is back.
Oh, he's back.
And he's unpacked his questions into 4 parts, so I'll be able to walk through this. So I'll start with the first one, which is slightly longer. If a client trusts our e-commerce platform and invests in our platform, how can you ensure she or he is well protected if the platform allows users to buy your service while investing in our e-commerce platform? That could be part of the cybersecurity conversation.
Yeah. So I think there's 2 things, because remember, and I must say that within my team, I do have a cyber insurance expert. So again, welcoming him to engage directly. Usually we look at something called proximate cause. And we do know that we're in an age of social engineering, where customers themselves introduce breaches inadvertently. And nowadays, with the advent of AI, we've seen the level of fraud increasing multiple times, right? So as I said, before even talking about cyber insurance, which is something that we are able to do, the bigger question would be, how robust is your platform? How well has it been secured? And again, how well have you or we continuously worked with your customer for them to be aware around the dangers of social engineering and etc., the covers we can provide. But we would want to go a step further and say, let's not just insure, let's ensure that first your platform is, secure, as secure as it can be. When I was talking about vulnerability and penetration testing and white hacking, those are things that can help him understand, is my platform secure? So that even as we're insuring you as your partner, at least that minimum hygiene that a customer would expect, then we are sure that you have that bit left here.
Good. So this one, I'm not so sure if you'll give him the numbers now. In e-commerce platforms, what are the rough premium rates?
Oh, wow. There isn't a standard answer. You're very right, because e-commerce platforms do different things, right?
Yes.
So maybe what we can do is he can share his contact information. I'll be happy to have the technical team engage with him.
Yeah.
And I'm sure he'll come out with a very specific answer to that question.
His last question is, do you insure digital assets like Bitcoin?
I knew that was coming. The question is, insure them against what? Remember, global financial assets cannot be insured from appreciation or depreciation.
Okay.
Economic exposures cannot be insured. It's the same way, for instance, today, nobody can insure you from the stock exchange rising or falling. What we do there is hedging, right? And hedging, we're now talking about using derivatives to hedge. So I think the first thing is, what risk is the exposure there? We do have, again, within Equity Group, specialists in derivatives. So depending on what he's looking at, then it would either be advisory and hedging as opposed to insuring. But I can see he has a very interesting business. It seems to be an alternative digital e-commerce platform. And I do think we also have a technology team who have a lot of depth and expertise in this area. So I would invite him to engage with us so that we can see what leg are we solving for him, either using insurance, either using hedging instruments, or either using advice from our tech team.
Thanks, Angela. So it's been a long conversation. I'm hopeful that there'll be more questions coming, but as we wind down on the conversation, I'll be encouraging those who need specialized, personalized service on matters insurance. Please drop us your number or email address. Angela's technical team, as she's been calling them, team of experts, will be reaching out to you to just give you solutions to the ideas and items that you have. We have a wide range of colleagues who cut across the life side, the general insurance side, and the health side, and we can be able to tailor items that meet your peculiar needs. Any closing remarks, Angela?
Yes. I would say that I think Equity as a business focuses a lot on impact. And so going into the insurance business was largely focused on impact. In the last, our first entity, life assurance, has just been in operations, just now getting to 4 years now. And we've been able to see that we've been able to provide 21 million policies to 7 million customers. We've also been able to provide our customers with competitive investment returns, often either positioned first or second in the market. We've also seen that we've been able to settle claims at 20% the time that it takes the industry to settle. And so we are sitting at a point where we believe that as an insurance business, we are very well aligned to deliver on the aspiration of Equity, which is impact, profit with purpose, but at the same time to ensure that our customers, they feel secure. When we're talking about our expanded value proposition, we're talking about health insurance and we're talking about general insurance, is when you look at an individual, a family, or a business, the exposure comes from any one of the three. It comes from a death or an accident. It comes from an illness, unforeseen. And I'm sure we're now seeing before we used to say cancers, cardiac issues are the preserves of those in the 50s. But we've seen that that is now a preserve of the 30s. So it's not as far off as we think it is, chronic issues, but yet they are manageable. We've also seen that interruption to business is a real thing. In fact, it's the one that people focus on every day. But MSMEs forget that their life and health actually is key to the sustainability of their business. So looking at your business alone is not enough, because then you're the key resource for that business. How do we ensure that we have a holistic insurance offering for you that you can use? So I would say that for us, we're looking for partnership with our members, particularly MSMEs, is a key area of focus, because MSMEs are driving the economy today. They sit in that unique middle between the consumers and the producers. They deliver the last mile. But at the same time, they actually carry 80% of the workforce in Kenya. And so we believe that providing relevant solutions to MSMEs will give us a very good opportunity to create impact and value for our customers. So I would invite the team on call who've been listening to us, but also perhaps there's somebody who's missed this conversation, who you know and would be a good person to engage with us. Let's connect. I think you have all of our contact information. We'd be delighted to have an opportunity to provide you with our insurance solutions.
Thank you, Angela. To our viewers, my great appreciation to have you on the show today. I know some of you are watching us from LinkedIn, some of you are watching us from Facebook, and most of you are watching us from Zoom. We should be able to provide a recording of this session on our YouTube channel. In the next hour, you'll have our live recording uploaded for you to just have a watch at your convenience. Our next session for Endeleza Biashara will be on the 25th of June from 10 a.m. our usual time, and we'll be addressing navigating uncertainty, what global economic shifts mean for Kenyan business. We've heard of Port of Hormuz. How is Port of Hormuz matters affecting your business? That's one of the items we'll be covering in our next episode. Thank you so much, and see you then. I've been your host, Collins Wanyonyi, Director for SME Banking at Equity Bank, Kenya. Thank you.